and welcome to VC Circle podcast. I'm your host, Joseph Rai. In this episode, we will be in conversation with Anup Jain, who is managing partner at early stage venture capital firm Orios Venture Partners. Orios has launched 2 funds so far, and they have invested in companies such as online pharmacy startup Pharmeasy, dairy startup Country Delight, auto maintenance startup GoMechanic, and online skill-based gaming app Zupi. The venture capital firm also runs a seed stage acceleration program called Misfits, which has run 3 cohorts so far. Hi Anup, welcome to our podcast and thank you for joining us.
Thank you, Joseph, for that lovely introduction. Happy to talk to you this morning.
So Orios has been in the news recently as it announced the graduation of 9 startups that were part of its 3rd cohort of its Misfit program. But before we talk about that, I wanted to ask you about how Orios has been engaging with its portfolio companies from the fund during this lockdown imposed due to the coronavirus pandemic.
So, Joseph, it's been an uncertain time for most companies, irrespective of size, as we all know. And startups were no different. So they required all the support during this period to rework their strategies in order to ensure, which is the number one priority for all startups, which is to actually survive this phase. Luckily for us, most of our companies, like the ones that you mentioned, actually, were impacted actually positively by COVID.
Okay.
And as consumers sort of retreated to their homes and set up virtual offices operating from inside their homes, and children and families started to operate all aspects of their life indoors, there was a greater degree of digital adoption that we saw in some of these essential categories. So the essential part of our portfolio, luckily, was larger than the non-essential part of the portfolio.
Okay.
So we were very happy to work with the companies in order to progress their business, support them operationally, because despite the fillip on the demand side, there were issues nevertheless on the operational side. As you can imagine, because of lockdown and because of reverse migration, they were operationally quite challenged in terms of being able to sustain and lift their operations in line with the consumer response. One of the startups that you mentioned, GoMechanic, which is in the auto aftermarket business, was virtually negatively impacted for very obvious reasons. There were no vehicles on the road. It was legally not allowed. But thankfully, after the lifting of the lockdown restrictions, it has virtually come back to pre-COVID levels because of the large pent-up demand.
Right.
We're also seeing a fillip in terms of personal mobility, and I'm sure you've seen those numbers. In fact, the used car market has come up as an impact of COVID as people want to stay away from public transport. The same thing happened in China, as well. Personal mobility, two-wheeler space really grew post-COVID, and we expect to see the same thing in India as well. Personal mobility will rise. Shared mobility is anyway very large, and it will stay, and it will rework its strategies, but that will be there. Beto, which is one of our digital healthcare investments directed at diabetes and diabetic patients to take care of themselves,
right.
In a full stack manner, that saw a complete fillip. There was large increases in terms of retention and usage of the app ecosystem, 90% retention, and dramatic lift in the NPS rates. We got organic consumer fill-ins. As you know, comorbidities was completely came into focus during COVID as well. So these were some examples of companies which saw an increase actually in their business. Kalli Network, which is a tech-enabled network of mid-sized grocery stores, saw a lot of inbound inquiries. There are currently 20 stores in Bangalore, and they saw a 30% increase in their business as consumers stayed indoors and preferred to shop in neighborhood mid-sized stores rather than go and visit large supermarkets and malls.
Okay.
Because of fear of obviously the pandemic and large crowded areas.
Okay.
So I think overall we worked very closely with the companies where they were operationally challenged, We worked with those companies as well, which were negatively impacted.
Right.
For example, companies in the mobility space, companies in the apparel and non-essential space. And yeah, worked with them on different strategies. Some of our companies, moved some of their staff to permanent work from home, much like the global giants, Facebook and Google and Twitter, etc. We've seen all that. So they were able to, reduce their expenditures, reduce the commute, reduce, the overall burn as well, and able to extend their runways and totally curtail that. Almost all our companies, without exception, spend time on tech development. This was a great time to consolidate all the data and do product development for what is going to be a higher scale of consumer activity post-COVID, and that indeed has held them in good stead. So they've been able to introduce new features, engineer their architectures to handle more consumer traffic, and which will help them to continue the scale of growth that has been absolutely positively impacted by COVID.
Okay. Are you doing a follow-on on your existing portfolio companies which you are more concerned about?
Yes. So we have a select fund which invests into Series B plus rounds of the breakout companies of our seed funds. And therefore, we don't lead those rounds, but it is an excellent opportunity for our investors to continue invested into the growth stages of these breakout companies, which are by now very dominant in their spaces. So we've seen 3 of those companies see follow-on investments, Pharmeasy, Country Delight, and GoMechanic.
Okay. And what is the investment pace of Orios going to be like in it this year? So some of the VCs I've spoken to said that they're going to wait and watch, while some of them said that they're going to be more aggressive in their investments this year because they're seeing more opportunities arising out of COVID.
Yeah, I think at Orios we continue to see an increase in quality deal flow. It did get impacted for a couple of months when the lockdown started.
Right.
I think the entrepreneurs themselves, they were not very sure of how it would pan out, and therefore delayed some of their plans. In fact, delayed some funding conversations as well. However, we find that as everyone understood COVID with more data and how to manage it and how to settle into the new normal, so to speak, we now see a high amount of quality deal flow. We see second-time founders come back and set up businesses having exited or failed at their first ones. We see CXOs and mid-level employees of large startup firms, unicorns, decacorns, etc., get together and set up their own startups with a whole lot of confidence. So we're seeing a high quality deal flow. We are also seeing that foreign nationals and returning Indians, they're also very keenly looking at India, because indeed this is the largest market if you want to be a startup founder today. And the growth from here onwards is going to be far more exciting than it has been in the last 10 years, I would reckon. We've seen the inflows due to the investments made by Facebook, Google, and other giants into geo platforms. We've seen the increase in data and smartphone usage. Today, the data on sales from the Prime days, etc., for Amazon, Flipkart has come through in some of the publications, and I only find all positive news over there. Okay. We find consumers buying more smartphones, which means that they are replacing their old ones or buying fresh ones to take care of their digital adoption needs, which have increased manifold. We've seen increase in media and content platforms, right? Earlier, there was only one video conferencing platform, which was Zoom, and that was an international product. We now have local products as well.
Right.
And we've seen the adoption of those as well. So I think overall there is quality deal flow, and the pace for our investments will be indicated by the quality of the deal flow and not really by anything else. So we don't see that 2020 is going to be any different from 2019.
All right.
In fact, we see some new sectors like work tech, remote tech, agri, and domestic SaaS.
All right.
These are the sectors which are really hotting up and picking up. Retail tech in the field of grocery has attracted a lot of attention as well because it is by far one of the largest. Payment space, is going beyond digital to micro payments. So we have made an investment in that space as well, which we'll be talking about very soon. And therefore, there are a lot of new spaces which the next India's digital adoption is going to unravel over the next coming years.
Okay.
So the startups addressing that space are going to be starting up this year.
Okay. So are you exploring deals in the spaces that you talked about now? And what are some of the themes that you're going to totally avoid?
So we are indeed looking at these sectors which are addressing next India's problems. Look, the first 10 years of internet adoption in India was largely by top 10 million households who were looking for a high degree of convenience. And therefore, it was all about how can I make cashless payments using my phone? How can I book a taxi and go from point A to point B without wasting much time? How can I, purchase products without having to take out my car and take my family to a mall and spend about 1 hour commuting and parking and everything else is, over and above that. So it was all about first India's problems. And these are global Indians who are globally traveled, have high GDP per capita. Their problems are the same as any other citizen in the developed world. And therefore, we saw a whole host of unicorns come out of that phase.
Right.
Today, what we see is the next India's problems. And we are investing behind all different sectors which address that. So I mentioned about micropayments.
Right.
I mentioned about mid-sized grocery stores requiring technology and becoming a part of a modern network. We have diabetics placed anywhere in the country being able to manage their condition remotely with the help of a digital healthcare platform. Don't even have to visit a primary healthcare center or a hospital unless it's absolutely necessary. Right. We're talking about the auto aftermarket that's having been organized. I remember 4 years ago, it wasn't there weren't much search volumes for consumers looking for car service options on the internet, but today we see that has dramatically gone up.
Okay.
Right? So the first port of call for consumers is not going to be asking their friends and their associates in the office, but is the first instinct today is to go to your phone and start to search for options over there. Okay. Right? Read reviews of unknown consumers and then make your purchase decision. I think it was old world to ask 3 or 4 of your friends for the references. Today, if you ask that question to your friends, even your friends tell you that why don't you look up online?
Yeah.
So we are investing behind the next India's digital adoption story,
right.
Whether it's education, health, SME, SaaS, work tech, D2C, retail, e-commerce marketplaces, agri, gaming, esports. So we're seeing all of that.
All right.
So that's the one single, I would say, large theme. We also invest in companies which are, which are essentially in large spaces and can create a story in a profitable and sustainable basis. We avoid sectors which are high burns and where consumer habits are being changed by application of large funding, and there is little hope to have a profitable, sustainable business once you remove the subsidy. Okay. We believe that the subsidies should not be so deep that you can never withdraw them, enough to be able to create a sustainable business left behind with the remaining consumers. Okay. So we believe in those businesses which are essentially high margin businesses. Yes, you can give an initial discount to create the trial, but after that, the proposition itself has to be so meaningful to consumers that they tell others and they create a sustainable business for you. lowering your consumer acquisition cost and increasing your retention and loyalty over a period of time. So that's the fundamental difference in our investment philosophy. All partners in the firm come with operating backgrounds. So we've all worked for startups. We've all worked for large companies. We've managed large businesses, India and overseas. So that's a difference in the profile of our partners versus, let's say, other venture capital firms. Also, I think you asked a question about which sectors we would like to avoid.
Right.
I think we are an India-focused fund, so the only sector that we tend to avoid is the enterprise SaaS business, where your clients are sitting overseas, and you're managing the business, or all your costs are sitting here in India. We believe that India is a big space, and there's a large opportunity over here. There are numerous sectors to create large success stories behind those two themes that we spoke about, and thus, we don't think we need to go outside of India, not at this moment at least.
All right. Interesting. All right. So there's been a lot of talk about consolidation happening in the startup space because of the pandemic and the huge money Reliance is raising. Do you see mergers and acquisitions happening at a rapid pace? And do you expect some of your own portfolio companies to be part of this exercise? And also maybe you getting an exit in the process?
I think, look, the pandemic has certainly caused companies to look at extending their runways. And therefore, if they're able to do that from fresh sources or existing sources, then that problem is solved. If in the case of this issue of M&A arises in the case of companies which have high cash burns, and because of the pandemic they are unable to raise that level of cash, which is required to extend their runways beyond what they see. And if they have been additionally negatively impacted by the pandemic, then they would be, under pressure to look for alternative solutions in the form of mergers and acquisitions, right? Luckily for us, our portfolio is well placed, and as I had explained, we invest in spaces which are, self-sustainable and which do not involve high cash burns in order to create a business proposition. We believe that the consumer or the value proposition created by the company may have an initial discount, but it cannot be a subsidy, which is long term. And thus, like I explained, consumers have to bring other consumers, and they have to become more loyal as they see that the value proposition is only improving, and therefore they feel like being loyal to that business, and that really creates the self-sustainable business. So, but I do see that the investment into geo platforms, there have been conversations around consolidation in some of the large spaces where a couple of leaders have been already identified, and this activity will continue. I think it has been made clear by the company that with the cash that it has received, it has paid off its debts, and it is looking at building a suite of digital services for its consumers, which are on the telecom network. And since its telecom network is predicated on usage of data versus voice, there's a fundamental different approach. Therefore, they will look at all these solutions. They've acqui-hired and merged or acquired maybe other businesses at a very early stage. I think they will continue looking, and this may provide exit opportunities more than just exiting to a large private equity investor. So I think it's all very welcome in the system, and I think very often we get asked that what are the exit opportunities for such investments, because they tend to be long-term in nature, and how does a investor cash out? So I think we're getting yet another player to offer an exit option for startups which have achieved a level of scale and product market fit. Okay,
interesting. So I wanted to talk about valuations. One of the VCs whom we spoke with recently said that some of the startups are demanding high valuations even during the lockdown period. What has been your experience?
So I think, look, this is the valuations is a clear interplay between demand and supply of capital for a particular kind of company in a particular sector with a certain level of proven performance, right? So one has to judge as to what is the performance of the company and other alternatives available in that sector for a similar investment. If there are no alternatives available, then it is natural that the startup founders realize that and they will demand some sort of a premium, right? But if there are alternatives available, the investors will look at all the other alternatives, weigh one versus the other, and see where they're getting better value, right? So I think all these factors really play out. No investor makes an investment blind-sided to competition, right? So when one looks at an investment, one definitely looks at all the other alternative companies and teams and evaluates all of them.
Yes. Okay, so finally, I wanted to talk about the Misfit program. So 9 startups graduated from Misfit Cohort 3 recently. Give us a sense of the response that these startups have received from other investors, and how many of them do you see raising the next round of funding soon?
So there were 10 startups which were there in the cohort. One of them actually got invested, so it did not feature in the demo day expand that we held between 28th and 30th July.
All right.
So we had 9 companies graduating out of this, raising anywhere from pre-A to Series B. We were very lucky, I would say, and we consider ourselves, privileged. We conducted the presentations over 4 different time zones.
Right.
One was India, Europe, US, and Asia slots. And we saw over 200 venture capital professionals from 100 plus VC funds attend this entire presentations globally. And there were 180 appointments which were set up within 24 hours of each of those presentations. The discussions are on as we speak. Very early to predict what's going to happen, but fingers crossed. I think each one of them is a very deserving candidate, we feel, for a future round of investment. They've achieved a certain level of product market fit. Over 15 minutes, each of them, basically carried out their own stories in front of investors. And they're having now detailed discussions with those investors whose sector mandates match their own. And they've been impressed by what they saw and heard. So we had this in the form of a webinar. And in fact, we did a small survey after that. And 95% of VCs said that even after COVID disappears or becomes under control, let's say with the coming of a vaccine, they would prefer this format over a physical format where they have to pack their suitcases and fly to a certain location to meet up with a startup for about half an hour to 1 hour.
Okay.
So I think this is another example that we've learned. I think we were the first VC firm in India to have a global, demo day of its graduating cohort, for the first time. And the response has been really phenomenal. I think everyone, as I said, over 95% people have come back. Just I think 1% out of that has said that they would prefer physical face-to-face meetings. But I think for the initial meeting, everyone's just encouraged us to completely follow that format. And I think everyone appreciates the time spent in organizing it in a very professional manner. And the presentations were held in a certain format, so they addressed all the checklists of most investors on the various points that they evaluate startups. So and there were different sectors, so I think that also gave a very good variety to most investors attending the term.
That's interesting. So have you started work on your next cohort already?
Yes. So I think cohort 4, we typically do 2 cohorts a year.
Yeah.
So this one started off late last year. It got formed, and then we started the boot camps January onwards until July, and that's why we had the graduating expand session, which is the demo day. Now I think in a couple of months we should have, maybe in a quarter or so, we should have the formation of the next cohort.
All right. Okay. That's interesting. So thank you, Anup. Yeah. So that's all we have in this edition of VC Circle podcast. Thanks for listening. Goodbye.